Hello and welcome to another daily dose of insights powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today it's Friday, so we have Fundamentals Friday here at Container Exchange. Let me just quickly share my screen here with you. We always take a quick look back at the week, what has moved markets on a fundamentals level. And of course, are there any news on freight rates or container prices globally that is worth mentioning towards the end of the week before we all start into the weekend? Very, very high up on the agenda this week was the flurry of interest rate decisions by the ECB, the Fed, and the Bank of Japan. And all central banks continued with increasing interest rates, or at least sort of continued with monetary tightening. That is despite cooling inflation worldwide. And even the Bank of Japan that has been very, very, very loose on the monetary end over the past years or almost decades, has now raised its ceiling of bond buying yields, signaling also a little bit more flexibility towards reining in monetary supply. All central banks, however, have now switched to a more cautious posture with regards to further moves, and that, of course, also signals the end of possible global monetary tightening. So stay tuned here. Very, very interesting. ECB still a little bit more open for continued rate increases because their inflation is a little bit more sticky than on the US side. Also talking about the US, GDP surprisingly strong. We had quarter-on-quarter figures coming in, plus 2.4% on an annual basis versus a 2.0% reading in the previous quarter and a 1.8% consensus. So significantly beating consensus here, surprising markets a little bit. And that is really on the back of resilience of consumers and businesses. With regards to inflation. So both businesses and consumers surprisingly resilient here, economic activity continues to increase. And then last main bullet point here for your information, the WCI, so World Container Index spot rate data from Drewry actually continues to show significant rate increases, especially on the Asia West Coast, so Trans-Pacific eastbound rates continue to soar. We now have about $500 difference versus 4 weeks ago, and that's plus 42% versus the same period in 2019. So really, the Trans-Pacific rates that used to be very, very sluggish during the first part of that post-COVID rate meltdown, if you want to say so, now continue to increase despite loosening worries on the West Coast, specifically in Canada, on the labor side. So labor disputes now decreasing in importance. Despite that, rates continue to increase. So I think that could also be the result of capacity control there by the big carrier. Volume is now on par with 2019. And for us, of course, we're still relatively pessimistic with regards to rates because we order book as a percentage of total fleet is still 30%. And we'll see a lot of that capacity coming in online in Q4 this year and 2024. We just don't see the demand for ocean capacity rising in unison. So supply-demand imbalance will significantly impact that rate level. That's it from us for today. Thanks a lot for tuning in. Please don't forget, 13th to 14th of September, we have our Digital Container Summit here live in Hamburg. First time in 3-4 years that we go back to face-to-face conference mode. Of course, lots of networking opportunities, but also a very interesting lineup of speakers, workshops, panelists. So really 2 days full of information and networking and discussions around the digitalization of supply chains and the container itself. So if you're interested in that, head over to containerexchange.com and there's some information about the DCS, the Digital Container Summit there. Stay tuned and have a good weekend. Talk to you next week. Bye-bye.